Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ameriprise Financial Inc. Annual Report. Ameriprise Financial, a diversified financial services company, offers a wide range of businesses and services to individual and institutional clients globally. The company operates through three main segments: advice and wealth management, asset management, and retirement and protection solutions. The Advice and Wealth Management segment provides various services including financial planning and advice, brokerage products, investment advisory accounts, mutual funds, insurance and annuities products, cash management, banking products, and face amount certificates. This segment caters to both retail and institutional clients. In addition, the Asset Management segment offers investment management, advice, and products through third-party institutions, advisor networks, direct retail, and its institutional sales force under the Columbia Threadneedle Investments brand name. The company's asset management products include mutual funds, exchange-traded funds, variable product funds, institutional asset management products, and separately managed accounts. The Retirement and Protection Solutions segment provides variable annuity products and life and disability income insurance products to retail clients. Overall, Ameriprise Financial offers a comprehensive suite of financial services that cater to the diverse needs of its clients worldwide. Ameriprise Financial Inc.'s stock price has experienced a significant decline over the past year, with a cumulative change of -14.45%. Despite this substantial drop, there is no single identifiable news event that directly caused the company's stock price to plummet by more than 11.54% in a short period. The daily and monthly stock price data from February 20, 2025 to February 20, 2026 do not show any single-day drops exceeding -11.54%. However, there were notable daily declines of -6.21% on February 10, 2026, and -3.89% on February 11 and 12, 2026. Ameriprise Financial Inc.'s news releases during this period reported positive financial performance and shareholder-friendly actions. The company announced an additional $4.5 billion share repurchase authorization and an 8% increase in its regular quarterly dividend in April 2025. It also reported strong fourth quarter and full year 2025 results, highlighting record growth in revenue, earnings, and assets under management. The cumulative annual decline suggests that the stock's performance was influenced by broader market conditions or a series of smaller, less dramatic downturns, rather than a specific news event causing a single drop exceeding the specified percentage. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through an analysis of the key points provided. On one hand, certain segments such as variable annuities and fixed annuities experienced a decline in balance and amortization, indicating a decrease in revenue. This is also reflected in the decrease in policyholder account balances, future policy benefits, and claims. On the other hand, areas like net revenues from fees and other sources showed significant growth, reaching $23,142 million. Additionally, gross premiums for life contingent payout annuities increased by 43%, while term and whole life insurance remained flat. Unearned revenue also saw an increase in various types of universal life insurance. The impact of these drivers on revenue growth or decline is evident in the fluctuations observed across different segments. While some areas experienced a decrease, others showed significant growth, highlighting the complexity of factors influencing revenue performance. Net income experienced a mixed trend between 2023 and 2025. Initially, it increased from $845 million in 2023 to $1,101 million in 2024, indicating a growth of 30%. However, the following year saw a decline, with net income decreasing by $461 million, 63%, from 2024 to 2025. The decrease in net income can be attributed to several factors. Firstly, the reduction in managed assets led to lower revenues and earnings. Additionally, guaranteed minimum benefits being higher than account values could support may have impacted net income negatively. Furthermore, interest rate fluctuations resulted in increased hedging costs or decreased profitability. Profit margins also underwent a decline between 2024 and 2025. The adjusted operating earnings margin decreased from 39.29% in 2024 to 34.35% in 2025, while the return on equity, excluding AOCI, remained relatively stable at 49.1% in 2025 and 49.7% in 2024. The decrease in profit margins can be attributed to several factors, including increased hedging costs due to market volatility, lower spreads, and lower profitability due to increasing yields on invested assets not keeping pace with current interest rates. Additionally, potential claims payments exceeding assumptions for LTC insurance products may have negatively impacted profitability. The company is generating positive operating cash flow. This can be seen through various financial statements across different pages of the report. On page 18, it is mentioned that the company appears to be generating positive operating cash flow. Furthermore, on page 67, it is stated that net cash provided by operating activities increased significantly from $6.6 billion in 2024 to $8.3 billion in 2025. The trend of positive operating cash flow continues across multiple years. Pages 86 and 100 and 4-106 show that the company has been generating positive operating cash flow in all 3 years, 2022, 2023, and 2024. The numbers also indicate a steady increase in operating cash flow from $1,098 million in 2024 to $1,234 million in 2025. Additionally, on page 205, it is mentioned that the net operating cash flow was positive at $13 million. Moreover, the total operating cash flow was also positive at $26 million. On page 279, the company's net cash provided by operating activities for the years 2022, 2023, and 2024 were $2.9 billion, $3.5 billion, and $3.9 billion respectively. Overall, these financial statements demonstrate that the company is generating positive operating cash flow, indicating a strong financial position. The company's debt level has undergone significant changes over the past few years. Initially, it increased by $235 million from 2024 to 2025. However, this trend was reversed in 2026, when the debt level decreased by 7.4% from $3,077 million to $2,842 million. Notably, long-term debt saw an increase from $2,842 million to $3,077 million. In contrast, interest expenses have remained relatively stable or decreased slightly. The company experienced a slight increase in interest expenses of $9 million from 2024 to 2025. However, there was no significant change in interest expenses in subsequent years, with the exception of a minor increase of $6 million from 2023 to 2024. Overall, while interest expenses have remained relatively stable, the company's debt level has seen significant fluctuations. The decrease in debt level in 2026 suggests that the company may be taking steps to manage its debt effectively. The financial performance of various segments and regions has been a mixed bag. On the positive side, advice and wealth management, asset management, and retirement and protection solutions have performed well. These segments generate significant revenues through fee-based services, driven by client assets and market movements. In terms of geographic performance, U.S. operations and EU countries such as Luxembourg, Ireland, and Netherlands have also done well. In contrast, foreign markets have struggled due to exchange rate and other risks. On the negative side, the variable annuity segment has been impacted by a $1.1 billion change in market value on VA guaranteed benefits reserves. Additionally, sales of life contingent payout annuities have declined. The corporate and other segment has also seen revenue decrease from $533 million to $427 million. The company's outlook and strategy are centered around driving growth through fee-based revenue. Management emphasizes building long-term relationships with clients to achieve financial goals, while also focusing on expansion into new markets and products. This includes international distribution for the asset management segment and investment in technology and services to support advisors and clients. To diversify its revenue streams, the company is investing in various segments such as advice and wealth management, asset management, and retirement and protection solutions. Additionally, management is placing a strong emphasis on risk management and protection solutions for retail clients. This includes using derivative instruments to mitigate risk or provide further diversification. Overall, the company's strategy is focused on driving growth through fee-based revenue, expanding into new markets and products, and diversifying its revenue streams. By building long-term relationships with clients and investing in technology and services, management aims to achieve financial goals while minimizing risk. The acquisitions and divestitures made by American Express are notable milestones in its business history. On the acquisition front, one significant deal was the purchase of IDS Financial Services in 1983. This strategic move likely expanded American Express's financial services offerings. In terms of divestitures, American Express has been streamlining its operations by selling off certain businesses. One notable example is the sale of closed-block long-term care insurance on a guaranteed renewable basis, although no specific date was mentioned. The company also discontinued new sales of fixed annuities in 2020 and moved them to the corporate and other segment as a closed block. Furthermore, American Express stopped selling fixed deferred and fixed deferred indexed annuities in 2020. These divestitures suggest that the company is focusing on its core business areas while shedding non-core assets. The company's financial activities have been transparent and consistent. One notable aspect is its commitment to rewarding shareholders through dividend payments. As per the provided information, the company has indeed paid dividends on multiple occasions, as mentioned in pages 64, 66, and 88 of the report. In addition to paying dividends, the company has also demonstrated a strategic approach to managing its capital structure by buying back shares. This move is highlighted on page 30 of the report, indicating that the company has taken proactive steps to optimize its equity base and potentially enhance shareholder value. That concludes the financial summary for Ameriprise Financial Inc. Feel free to comment below, and I will be happy to answer them when possible.